Welcome to episode 76 of the Cashflow Connections podcast. The topic for today is why Jim Rogers thinks the next crash will be worse than 2008. There's a lot of people out there that are willing to make claims about financial markets, but if you actually look into what they do, if they actually manage a fund, for example, you can see that some of the claims they may make in the media just don't really line up with their behavior. Well, this is simply not the case for our guest today. In fact, in 2007, at the peak of the housing boom, he went on CNBC and said, look, U.S. housing is in an absolute bubble. The house of cards is about to come down. I'm going to sell my property in New York City and move to Singapore because I think the ship is about to get wrecked. And that is exactly what he did. In my opinion, it's always interesting to have conversations with people who are not afraid to say what they think, especially in front of a company like CNBC that may not agree with them. So in this discussion, we're going to talk about debt. One of the main reasons for the crash in 2008 was due to high sky debt amounts that had historically never been seen and a complete lack of austerity in the global capital markets. But what's happened since then? Nothing but higher debt levels and complete lack of austerity again. So that's really the argument behind why this next correction will be more pronounced and more significant, and why it may even last longer. Of course, related to that, we're going to talk about central banks. What are central banks going to do if we do have a significant correction? Because we think that they will do everything in their power to avoid facing the music. The question is, how long can that go on? And it's really an important question because it seems to be much longer than a lot of us anticipated, but it's really still on the table as far as that game is going to come to a close at some point. We're also going to talk about why our guest is holding US dollars despite not really being bullish long-term. It's more a safety move, but he anticipates that being a lucrative investment for himself. And we're also going to talk about why Jim decided to move to Asia. This is a big part of his worldview as well as his investing strategy, specifically why Jim decided to move to Singapore. We're also going to talk about some of the benefits of living and investing based on international outlooks rather than just staying domestic. Now, let me say something. I know you guys are listeners to the show, and because of that, you have a very good sense of what's going on in the world of investments right now through our network or through other shows that you listen to. So I'll just ask, do you have a lot of cash sitting in a bank account right now? It's very likely that you do, because you've probably found it's very challenging to find consistent deal flow right now. I spend a lot of time reviewing deals, and people send me deals all the time, and I really appreciate it. And because of how we're positioned in the market, I have a pretty good sense of what's available out there. And I really will say, I continue to be extremely bullish on the mobile home park sector, and I continue to be very bullish on our current offering. And this is not just me saying this. This is after reviewing dozens and dozens of deals. But also, when we originally opened our fund, I made my standard co-investment into the offering. Then a few months later, we decided to reopen the fund again. I doubled my co-investment. And now, because of the lack of opportunities out there and because of how much I like this deal, I just increased my co-investment again. And this is exclusively because of the fact that I think it's the best way for this particular capital to be invested. Now, of course, this is not investing advice. This is just my personal investing strategy. It's not letting you know what you should do with your capital, but I'm just letting it be known. Remember, I'm an investor as well, and I'm always doing the same things you are, balancing cash flow, balancing cash, trying to be careful about being too allocated to one particular offering. And that's just kind of where I've come out right now, given what I've seen that's available out there. Now, of course, we invest in every deal that we make available for our investors, but I have increased the co-investment for my own personal portfolio just because I think it's a really great vehicle. For those of you that don't know, we currently have a mobile home park and self-storage fund. There's more than 16 assets already in the fund that are already performing. It's managed by two of the leading sponsors in their respective asset classes. And I really like the size of the fund. We're likely going to be up into that 30 to 40 property range. So let's say you invest $100,000. It's basically $3,300 per property. It's very challenging to get that kind of diversification. And the last time I ran the numbers, we're actually close to about 58% loan to value on the fund size. So when it comes to principal protection, which I think we all can agree right now especially is absolutely critical to be focusing on, I'm just not seeing a lot of similarly favorable opportunities right now. So if you're tired of logging into your bank account and seeing $100,000 sitting there, basically earning nothing, Well, I feel your pain, first of all. And if you haven't yet created an account with us, make sure to do so. And we'd be happy to help you get that $100,000 invested. Our fund currently has about 12.5 million funded. We'll likely keep the fund open until we have about 15 million funded. We think that will probably happen in the first half of 2019, somewhere in that range. So if you haven't yet invested in the fund, or if you have and you're looking to increase your investment amount, which a lot of our investors have done, go to cashflowconnections.com, create an account, and you'll have instant access to our offering. Now, remember, the offering is only appropriate for accredited investors. Of course, if you have any questions, don't hesitate to reach out to me at info@cashflowconnections.com. All right, hope you enjoy the episode. How's it going, everyone? Our guest for today is Jim Rogers, who is a businessman, investor, traveler, and well-known financial commentator. He is the chairman of Rogers Holdings and Beeland Interest. He has been featured prominently in Forbes, CNBC, Fox, and a variety of other news outlets. But more than anything, he is just the man. So, Jim, I really appreciate you coming on. Thanks again. It's an honor to have you on the program.
I'm delighted to be here, Hunter. Let's go.
So let's start with your story. I want to hear a little bit about your background and what were some of the influential figures that moved your career along so quickly.
Well, I'm not sure it's so quickly. I did a lot of hard work. I loved what I was doing and did nothing more than work, because I didn't consider it work. It was just a lot of fun. I guess since I was able to retire fairly young, a lot of people would think it was quickly, but I was having a lot of fun and doing a lot of work.
Makes sense. And who were some of the people that significantly influenced you in your thinking regarding money or investing or business as a whole?
Well, I guess a lot of it was I grew up in the backwoods of Alabama, where money was hard to get and you had to work hard to get it. And if you got it, you wouldn't get much unless you did a whole lot of work. So I presume that my background growing up in a very small town in the backwoods of Alabama, probably as much as anything else, I started working when I was 5 years old and did all sorts of things along the way and had a lot of fun. I never considered myself working that hard, but looking back on it, it seems pretty strange what I was doing in today's times.
Yeah, makes sense. Now, I actually was recently at Freedom Fest and spoke on a panel with Peter Schiff and about the housing bubble, the film that just came out in which you were featured. And one of the most interesting parts of the film was some of the Austrians that were able to accurately predict the housing bubble in the United States. And I know that I believe you sold your property in 2005 when the volume of sales was just skyrocketing in the sense that people were piling in the market at that time. What were some of the metrics that you were looking at that resulted in you liquidating out of your U.S. real estate in terms of residential holdings?
Well, it was actually 2007, the fall of 2007, when I sold. I had been quite vocal in the press, constantly saying this whole thing is going to collapse. My wife used to get furious at me. She'd say, "Wait, would you shut your mouth? We're trying to sell a big house. don't go in the press telling people everything's going to fall apart. We'll never sell this thing." So we did sell. We sold it at a good time, at a good price, and we're pleased we did. I could see, all bubbles look alike. I'm experienced enough now to know what bubbles look like. They're all the same. People say the same things, and the same results always happen. It's uncanny that if maybe somebody should actually do a book about bubbles. If I had time, I guess I should do it. I don't know if there's ever been a study, but they're all exactly the same, and the same things happen. And most dangerous words are always, "Oh, it's different this time. Don't you understand? It's different this time." It's never different.
We have heard that many, many times, and especially hearing that towards the end of any economic cycle is very, very common. And I appreciate the clarification there versus 2005 versus 2007. So it really was in the absolute height of that real estate bubble. It couldn't get more hot, especially in New York, Manhattan. Were you actually focused on the real estate market at the time? Like, were you looking at the subprime crisis as a potential cause for that challenge? Or were you seeing the overall mania that was taking place in the economy as a whole in terms of making that call at such a prudent time?
Well, no, I was on Fox every week in those days. And every week I would talk about how this is all going to collapse. I explained that I was short Fannie Mae and all of those stocks, and that when people would say, well, what's Fannie Mae going to do? I said, it's going to go to 5. I'll cover it if I was short. So I'm going to cover it at 5. I just said 5 to be polite because I knew they wouldn't listen to me. If I told them it was going to go bankrupt, no, I short all the investment banks. I was short a lot of stuff because this was very clearly a bubble, and bubbles always end the same way.
Yeah. Well, that actually is an interesting segue to, the next kind of topic and questions that I had for you, which is, current state of the economy. Obviously, we're in the second longest expansionary period in the history of the United States since the Civil War. And we've seen, affordability in a lot of asset classes declining and obviously debts increasing. I wanted to get a thought of where you see us now as opposed to where you saw us in 2005 and 2007, given the market cycle.
Well, you've already said it. We're the longest bull market in American history, one of the longest economic expansions. I mean, the next sentence is, it's got to come to an end soon. No, it doesn't have to come to an end soon. No reason it couldn't last another 10 years, another 20 years, except it's not, because it never has, and it cannot, given the state of the American economy and the American debt situation. So we're in a period which is dangerous. I don't know how much longer it'll go. These things always last longer than they should. This one already has. But I wouldn't be rushing into stocks in the United States in late 2018.
What do you think are some of the ways that the boat can crack and take on additional water? I mean, what are you seeing as being the weak spots of the U.S. economy or the global economy as a whole? I know that you pay attention to the global financial markets as well.
Well, Hunter, these things always start in a place we're not looking. In 2007, Iceland went bankrupt. Well, most people didn't know there was an Iceland, much less that it could go bankrupt. And if they noticed, they didn't pay attention. But then Ireland went bankrupt. Then Bear Stearns went bankrupt. Then Northern Rock went bankrupt in the UK. And oh my gosh, Lehman Brothers went bankrupt. Then people started noticing, oh my goodness, something's going on here. What's happening? It always works that way. It starts in a place we're not watching, and in a few months or several months later, everybody sees it on the evening news and knows there's a problem. That's probably happening now. There's certainly enough places that are being ignored that are going bankrupt because they're ignored because they're, quote, insignificant, just as Iceland was insignificant back in the day.
Yeah, it's pretty fascinating. I mean, there is so much. Actually, let me ask you then. There has been such a shift. It could just be this timing of my career, et cetera, but I feel like everyone is so focused on recessions. Did that 2008 situation change anything? Or have you've seen several cycles in your career? Is the mentality similar now than it was, let's say, 30 years ago? Or did that 2008 situation have a paradigm shift for a lot of people in terms of the overall marketplace? It's hard for me to get an honest sense just because of what I do and who I associate with. I mean, what are your thoughts on that, like the general public?
Well, if you look back, this has happened many times in the past several thousand years, and people always forget. People forget what happened before, or they forget the warning signs, or even if they hear the warning signs, it's different this time, Hunter. Don't you understand? It's different this time. The world is different now. And if they remember, they always come up with the answer that it's different. So no, it's the same thing. You see the same thing. People are changing jobs because it's different this time. People moving away to different parts of the country. People speculating because it's different this time. Same thing is happening this time around, and it's going to have the same result.
All right. Well, that's fair enough. And I think that, a lot of things, one of the things, for example, that always comes up is the debt, right? And the debt, it doesn't really matter until interest rates increase. That's kind of one of the prevailing theses, if you can call it that, that's out there. So one of the things I wanted to talk to you about is the U.S. is in a very unique situation. They have the global currency. They have a central bank. It doesn't have another state that has a say in that central bank. So it's not similar to Europe and the Eurozone, for example. So there's so many questions I want. At the end of the day, how is this going to play out in the sense of, do you anticipate interest rates rising? And if so, who is going to be the Fed chairman that's going to intentionally basically commit financial suicide? Like, how does this end up playing out with a a new paradigm where printing money is completely the standard, but also because we're all in the same boat together, it seems like the dollar there's still demand for the dollar somehow. I mean, what are your thoughts on that?
Well, first of all, I should tell you that the previous head of the central bank in America, her name was Janet Yellen, has said publicly that we're not going to have any more financial problems. There are never going to be any more financial crisis.
Oh,
Sorry,
okay.
I laughed. Sorry, I laughed. But,
well, I guess we can wrap up at that point.
Yes, exactly. You should rush out and buy everything you can. Leverage yourself to the hilt, and happy days are here again. If you accept what she says, I obviously don't, then you should hang up right now. But this is going to end very badly. Interest rates have never been this low in recorded history. Never in recorded history, not just in America, anywhere in the world. So what has been going on is a startling, I'll say experiment. It is an experiment because frequently the central bankers, when they're not being recorded, will tell you it's an experiment and they don't know how it's going to wind up. I know how it's going to wind up. And we're not going to like the way it's going to wind up because whenever the world has had a period like this, it's always ended with bankruptcies and huge problems and people trying to blame other people. And in fact, it's pretty simple. This time around, it's the central banks and the government in Washington that's the cause of the problems. But it's going to end very badly. I have said in the past, in the press, that the next bear market is going to be the worst in my lifetime. And I'm certainly older than you. And when I say that, to me, it's a pretty simple statement. People get startled, but I remind you, Hunter, in 2008, we had a problem because of too much debt. Since then, debt has gone skyrocketing all over the world. Everybody's talked about austerity, but nobody's practiced austerity. So the debt is, even China, in 2008, China had huge amounts saved for a rainy day. It started raining. China started spending the money and helped save the world. Even China has debt now. China has a fair amount of debt now. So I don't know who's going to save us this time around.
Yeah.
Well, I do. I know what's going to happen. They're going to, when the problems come, the central banks are going to jump on their horses, do everything they can to save us, print money, buy assets, etc. For a while, there'll be a rally, but then that rally is going to end. It'll be the last one because the market's going to say, guys, we're not going to play this game anymore. We don't want this garbage. And that will be the worst bear market in my lifetime. And when I say that, that's not the end. I didn't say the world's coming to an end. I mean, it might. It could lead to war and all sorts of things, but I don't expect the world to come to an end. Not now, anyway.
Well, that's interesting. You definitely touched on a lot of things that I kind of want to get into. So I am 100% confident that the Fed will do anything to maintain order in terms of interest rates. I don't see a Volcker style interest rate situation. They will buy assets. This has been proven. This is a new paradigm shift. This is a Pandora's box situation. So how does this play out? Like, if they do make those moves, what ends up happening? Is it that people stop buying the US dollar and that no longer is the world reserve currency? And if so, what is the replacement? I mean, what are you seeing in terms of that?
Well, at the moment, I own a lot of U.S. dollars, not because the U.S. dollar is a sound currency or that the U.S. is sound. I mean, we in the U.S. are the largest debtor nation in the history of the world right now. Not the largest debtor nation in the world, the largest debtor nation in the history of the world. Nobody's ever gotten themselves in this kind of situation. And the people that get themselves in similar situations have always wound up with a crisis or a semi-crisis or worse. So that's what's going to happen to us. You say, well, then you will say, why do you own U.S. dollars? I own them because as the turmoil gathers, people always look for a safe haven. The U.S. dollar is considered a safe haven. And if nothing else, people think it's less bad than the alternatives. I mean, they're not going to rush out and buy the euro. Not going to rush out and buy sterling. Not going to buy most things these days. So my plan is that the dollar is going to get overpriced. It could turn into a bubble, depending on how bad the turmoil is. I would suspect it will turn into a bubble, at which point I hope I'm smart enough to sell, get out, and put my money elsewhere. I have some thoughts about where elsewhere is, but first we have to get from here to there. You see how easy it is to get rich when we just got rich here in less than 90 seconds.
Right.
Sold our dollars at the top of a bubble and went elsewhere. That was easy.
One of the things that comes up when talking about global GDP, I'm fascinated by the situation in Japan. They have a more than 200% debt to GDP ratio. To put that in perspective, the US is teetering on about 100%. Not quite there yet, but it's close. But the thing is, though, Japan, when they went through this, lost 2 decades where they had price collapse by about 80% across the board in multiple asset classes. They implemented this strategy of buying debt, and they didn't experience hyper unemployment. They basically had a very calm and depressing couple of decades where they experienced a lot of depression inside the country, and they also experienced negative population growth. Do you see that as being a potential outcome for the U.S., and is that where the U.S. is heading? And with that in mind, do you therefore have potentially decades before we struggle with some kind of currency collapse if Japan has been able to do this without being the world reserve currency?
Just a slight correction. It was 28 years ago, not 2 decades ago, that the Japanese stock market made its high. And here it is 28 years later that the Japanese stock market is down nearly 50% from its all-time high. So it's been a long, and the reason that it happened that way, by the way, is because they would not let anybody fail. They bailed out everybody in sight. So they obviously, if you don't clean out the system, you just continue to have problems. The way the system is supposed to work is when people get in trouble, competent people come along, take over the assets, reorganize, and start over from a sounder base. What Japan did and what America's been doing too, and England and Europe. We have come along, taken the assets away from the competent people, given them to the incompetent people, and say to the incompetent people, now you compete with the competent people with their money. And that's why Japan is still not recovered. And of course, it's seriously, I mean, by the way, I own Japanese shares. So let me quickly tell you that. I do own Japanese shares as we speak, which are down, as I just said, 45 or 50% from their all-time high. I own them because they're doing their best. The government, it's not good for Japan, but they're doing their best to get the markets up. But Japan has a declining population because they don't have babies. They won't let in foreigners. They won't let in immigrants. And the debt's going through the roof. I mean, Japan has got a horrible... If you're a 10-year-old Japanese, you better get out of there now. Because when you're 40 or 50, it's going to be a nightmare, your country.
Yeah.
Staggering debts, staggering internal debts, no population. I don't know where we're going to get our sushi in 30 years. What about all those gorgeous Japanese women? They're going to be gone. It's going to be a nightmare in 30 or 40 years. But in the meantime, I own Japanese shares just because the government is doing its best to get them up.
So that is fascinating. I appreciate you sharing all that with me because it is something that I've asked a lot about on the show and haven't gotten really good. It seems like you and I see that situation very similarly. So do you think that that is where the U.S. is headed? Because I don't see there being a limit to what the government and the way that political incentives work. I don't see there being a limit to what they're willing to do.
There is no limit for a while, and even if they get assassinated, there are going to be plenty of guys coming along who'll do the same thing and more to save Western civilization, is the way it will be couched at that time. One slight difference is that we have immigration, whether we like it or not, legal or illegal. The Japanese have essentially no immigration because they just don't like foreigners and they won't let you in.
Yeah.
Even though they desperately need foreigners now. And they won't have babies, even though they desperately need babies. So they're opting for a declining standard of living. I mean, it's not as though they're sitting around saying, oh, let's have a declining standard of living. But the facts are, with no immigration, no babies, and rising debt, you're coming up with a declining standard of living, which they are starting to experience. Will it happen here in the U.S.? Well, we do have immigration. As I say, whether it's legal or not, we have it. It's difficult to be an illegal immigrant in Japan, A, because it's an island, and B, because everybody's the same. Everybody looks the same, sounds the same,
Right.
et cetera. In the U.S., you can come into the U.S. You don't have to look the same because there's no such thing as looking the same in the U.S. or speaking the same or eating the same. So the U.S. has one slight advantage in that we do have new immigrants. What might be regularly known as second or third generation Americans are not having babies, but the immigrants are having babies.
Mm-hmm.
And they're coming across the border, whether we like it or not.
Yeah, it's a fascinating situation, something that we definitely need to be aware of because of the way the political incentives are set up. Something that obviously has been coming up in the news a lot is China, especially as it relates to trade. And I wanted to give an opportunity to hear your thoughts on that situation, as well as how this relates to our conversation regarding the U.S. as the reserve currency, particularly the Renminbi being a potential outcome if things go wrong.
Well, I own Renminbi at the moment, but it's difficult to talk about it being the replacement for the American dollar because the Renminbi is not convertible even at the moment. So it's a little bit absurd to say that, although it's the only currency I see on the horizon that can compete with the U.S. dollar down the road. It's got the population, its economy is big, its population is big, it's got lots of assets. It's got everything. So it's the only thing I see. It will someday be convertible again. Any day, if you ask me, but I'm not the one making the decision. They're making the decision.
Right.
And they're doing it their way, I assure you. So that's the only currency I see on the horizon that can compete with the U.S. dollar. The U.S. dollar, as I say, is going to turn into a bubble, or at least get overpriced. It's going to go down. That will be the last guess for the U.S. dollar. But Hunter, these things don't happen overnight. It took several decades for pound sterling to lose its status as the world reserve currency. It even had exchange controls in the last several years, and it was still being used by many people as a reserve currency or medium of exchange. So it's difficult to kill these things. It will happen, and it is happening already, as you probably know. Many people are moving away from the dollar now. The Chinese, the Russians, the Persians are all trying to come up with a replacement system for not just the U.S. dollar, but for the World Bank and the IMF and the whole lot, because it's all controlled from Washington and the power is being abused. Moving away from the U.S. dollar. We're going to have our last gasp. It's going to get very strong because of the situation around the world, but then it's going to collapse and that will be the end.
Interesting. And I think the real follow-up question to that is, what does that mean to the everyday American citizen? What does it mean to everyday Americans? What does it mean to investors if the world reserve currency changes?
Well, in 1918, the UK was the richest, most powerful country in the world. It wasn't even a number two in 1918. But now the UK is not even in the top 25 of the world powerhouses. Well, I guess maybe it's in the top 25 because it has American troops, et cetera, there. But, the UK is nothing compared to what it was in 1918. It takes a while to decline. You can go back and look. France, Spain, the Netherlands, many people have had this position in the past, and they've lost it, and things have declined, and the standard of living goes down. People in the UK don't live now the way they did in 1918 when they all had many servants, houses, et cetera. And they traveled around the world. They owned the world in 1918. Those concepts are probably inconceivable to you because you don't know what it was like in the UK in 1918. But that's what happens to everybody, and I'm afraid it's going to happen to us. And I don't like saying it. I'm an American citizen and taxpayer and voter like you. I got American kids, but one has to face reality, or you get wiped out too.
I'm interested. I definitely want to talk about the America position as well regarding.
I do. Let me just go back one last point on that. Even as late as the 50s and 60s and into the 70s, many people were trying to immigrate to the UK, even though the country was essentially bankrupt. The currency was in the process of going down 80% against the dollar and other major currencies. And yet people were still because the perception is a little bit like the U.S. I said to you earlier, many people think the U.S. dollar is a safe haven. The perception out there with the public is still that the U.S. dollar is the place to be. And it was in the 50s, 60s, and 70s, even though the UK was going down the tubes, many people still wanted to immigrate to the UK.
Pretty fascinating. I mean, it's similar to the way that the prettiest girl in the ugly competition or whatever is probably appropriate for that. What does this mean for real estate in the United States? Are you currently interested in real estate? Are you investing in real estate? And how does your perspective on the overall global markets tie into real estate and U.S. real estate in particular?
Well, the U.S. is a very, very big country. It's one of the biggest in the world. So when you say real estate, what real estate? If you mean houses in New York City, no. If you mean houses in Nebraska, probably. With the places that produce natural resources, especially agriculture, are going to be much better in the next 10 or 20 years. The financial markets, the financial centers are not. So I wouldn't buy a place in Boston. I might buy a place in Nebraska. I'm not. I don't want to live in Nebraska either. But, when you talk about real estate, what kind of real estate and where?
Yeah. So, I mean, particularly investment real estate, whether it's residential or commercial or agricultural, I'm interested if you are bearish on the overall real estate vehicle, or if there are some opportunities where you think it makes sense strictly as an investment rather than a place to live.
There's staggering opportunities in real estate in North Korea. I mean, if I could buy everything in North Korea, I would right now.
Wow.
Unfortunately, I'm a citizen of the land of the free, so I'm not allowed to. We're not free like we once were. No, there are many places in the world where there are fabulous opportunities in property at the moment. Parts of Russia, parts of Siberia, great opportunities. Colombia in South America, great opportunities. Probably Venezuela. I'm just too lazy to get involved. Venezuela is probably a spectacular place to buy property in 2019, 2020.
That's interesting. I like the countercyclical thing. And I've actually discussed the same topic with Doug Casey, who has an interesting perspective on a lot of that. It's challenging sometimes to get involved in those hyper divisionary countries because the rule of law, you don't know if your property is just going to be taken from you. But if you could, it may not be a bad idea. One of the things you mentioned a couple times is that you're a U.S. citizen. And I'm definitely interested to hear your perspective on that. I know you moved to Singapore. Obviously, a lot of people move to Singapore for the benefits of the taxes. I'm not sure what your main motivation was, but obviously the United States, they tax your income no matter where you are. At least that's what it says in the tax books. What's your perspective on, maintaining your U.S. citizenship despite living in a very tax favorable country?
Well, U.S. citizens, and we are the only one or two countries that have this luxury. You have to pay your tax no matter where you earn your money or where your assets are. If you have an American passport, you're supposed to pay American taxes as long as you have an American passport. And, I do. Obviously, I do. My kids, my wife, we're all American citizens. There are many people giving up their American passports now for a variety of reasons. One, it's not just the tax situation. I know a guy in Hong Kong who's got like 120 companies or something. His accountant said, listen, the law is written. If you make a mistake or if I make a mistake, you're going to lose everything. You've got to give up your American citizenship because if it's an honest mistake, it doesn't matter. You lose everything. So he gave up his passport just because American tax laws and the IRS is pretty vicious about these things. And if you live abroad, they assume that if you're living abroad, you're trying to avoid taxes. So some Americans are having to give up their passports just because of the way the laws are written. There's still more people going to America than giving up their passports. As I said before about the UK, there are still people going into the UK as late as the 70s. God bless their souls. I'm sure they're sorry they did. But no, human beings are different in their outlooks everywhere. I still have my passport. Everybody I know who lives abroad constantly is examining the situation because you get very little for it now, being an American citizen. If you're on the plane and they collect passports, you're the first one thrown off the plane if you have an American passport, et cetera, et cetera. So, there are many people questioning it, partly because of the tax laws and partly because of the political situation worldwide.
Certainly.
America's making fewer and fewer friends. It's not just Trump. I mean, many of these guys are making fewer and fewer friends for Americans throughout the world.
Interesting. And America has its advantages for many, many reasons, but I could certainly see the discussion. I mean, if I were in consideration of moving full-time to another country, I think it'd be a very challenging to keep that passport. I have looked into it, and if you do that and you renounce your citizenship, they take it all away. I mean, you don't get to visit frequently. It's kind of a whole deal because you do lose that entire global tax that they're planning on collecting from you. But Singapore is definitely one of those places that I find compelling, but I've never been. So I was wondering if you could kind of share what it's like in Singapore. What is the climate like? Or how frequently do you meet people that are, similar international businessmen? Is that kind of the standard in your day to day?
Well, Singapore is near the equator, so the weather is pretty simple. It's either hot or hot and raining. And if it's hot and raining, it's not going to rain much longer. But it's essentially it's the tropics. It's always hot here, as it is anywhere on the equator or near the equator. It has been probably the most successful country in the past 40 years. It was a swamp 40 years ago with 500,000 people. Now it's got 5.5 million people, and if you come here, you'll probably be astonished because everything from the moment you land in the airport to everything, oh my gosh, this is not America. Everything here works, and it's much more efficient, et cetera, cleaner, and it works. So everybody knows, and that's why it has gone from 500,000 to 5.5 million. Partly though because they did their best to get immigrants to come here. They needed people. They wanted successful, educated, talented people, and they did their best to attract them. 150 years ago, we in America gave people land if they would come to America and work. And so a lot of people came, and America became a great success story. The most successful country in the 20th century, built on all those immigrants that came and helped build the country. So that's what Singapore has done. It's not doing it now. It has become a great success. But everything works. Education's great. If you look at international education scores, American kids are not even in the top 25 anymore. Singapore is always in the top 3 in those international tests. Healthcare is great here. In America, we spend, 4 or 5 times as much as anybody else on healthcare. Our life expectancy is not even in the top 25. So a lot of advantages, just lifestyle, living in places like Singapore where everything works, including medicine and education.
Fascinating stuff. So one more kind of overarching question I have. Again, it's very interesting. The run-up that we've had in real estate has been so compelling that sometimes you lose perspective. So if there was one thing that you wish you learned earlier when it comes to bubbles and markets, what would it be?
Move to Asia. I wish I could.
Why is that? What is it about Asia right now that you're so bullish on?
I mean, you haven't been here. I was going to say, look out the window and you'll see. The largest debtor nations in the world are in the West, America and Europe, Japan too, of course. But Japan even has a lot of external assets. Internally, it's a gigantic debtor, but they still have a lot of external international assets, U.S. dollars, for instance. But Asia, the largest creditor nations in the world are in Asia. The largest debtor nations in the world are in the West. There's a spirit. Everybody works hard. They discipline their children, educate their children. If you look at the international test results, they're all the top, nearly all in Asia.
Yep.
They still educate their children.
Right. Well, fair enough. I certainly think you made that point, especially about the Asia markets. And I'm looking at the time here, Jim. I know you need to run, so I'm going to go ahead and let you jump off. But, I just want to thank you again. I've been a fan of yours for quite some time, so it's an honor to have you on the program. For the listeners at home, if you want to learn more about Jim, you can go to jimrogers.com. He's also authored a ton of books, which are available on amazon.com. So make sure to check those out. All right, Jim, thanks again.
Thank you. Bye-bye.
All right, listeners, thanks for checking out the episode. As always, the contact information for our guest will be available in the show notes, which is hosted on SoundCloud, iTunes, and Stitcher. Don't forget, if you want access to some of the free goodies that I'm talking about at the beginning of these episodes, like free ebooks, weekly investor emails, and articles about some of the most important investment-related topics, make sure that you have created an account with CFC because this stuff is automatically available. You can do this by going to cashflowconnections.com and signing up as an accredited investor. Of course, if you have any questions, feel free to email me at hunterthompson@cashflowconnections.com. Thanks again.